Hello, hello, and welcome to March 10th. Alphas continue leading with CPRI at 68%. There it is, 68%. We got our close above the third ratio yesterday, and it closed again, and we now have our higher low, higher low down here, still in the first ratio, but that's what it is, and you'll be waiting for this for the pattern to appear now anywhere in here to move the stop up. Of course, at 68%, that's only 32% away from ROI 100. So we get to ROI 100, bada boom, bada bing, last bar low. All right. With that said, that takes us down to ITB. It's an ETF for home builders. It is. And it's got a long way to get to the third ratio, but it's already running at 30 ROI, 32 ROI at the first ratio. So there's a strong potential that this could reach 30 or 100 ROI by the time it gets to the third ratio, way up here at 74 110. And let me check to see if we're past our initial stop. We are. So our official stop is right here now at 57.15. Coming on now to our next one is KR. We are going into the spring season very shortly. And so again, nice, this little, it could be accumulation because look here, we've been flatlined in this one for a while, and the 30 and the 10-day moving average is now starting to creep up. So indication we could be getting accumulation buyers from the institutions to get this to move on higher up. So there we are at 17% for KR. Going on to T. And at T, we have still a bit of a flat line. It's not much, but it's past the first ratio, working ever so hard to the second, and to that third ratio. CVS is my favorite. This was done as a video. That's why we do not have our projected info here because it was going to take an extra time on the video. But the private group was happy because they wanted to see how I set this whole thing up. They were not much into what's going to happen. They're more interested in what is happening, and that becomes very important. T minus. Now remember, T minus was one that we got a real bad fill. I mean, this was really very devastating. We got filled at 740 with anticipation of getting in at 595. So that was $1.45 is what this $1.55 over. So we had a lot of resistance, a lot of makeup here, but finally it's breaking into the positive zone at 6%. It is creeping closer to that third ratio, and we'll keep an eye on it to see if we can get to that third ratio if we're to avoid the one ratio loss. That takes us to RTX. Now, this is interesting, and I mentioned this before. The market's hot. Scanners are coming up with all calls, and our only put is RCL, which I'm gonna show that anyhow. I'm gonna show the reason I have a lesson on there. But the bottom line is here on RTX at 5%, and the third ratio is up here at 85.95. So RCL. Oh, and we also had an exit today too. I'm gonna have to get to. Okay, so RCL, Royal Caribbean. Even though the world is coming back to a little bit of normal, not much, but it's right there. It's attempted to break through the first ratio going the down direction. It pulled back, but it's again showing indications of it going into that down direction. So here we are with the first loss ratio at 99.30. Let's take a look. 99.30 is correct. Okay, our exit of the day was XLC. A little disappointed, but not expected. And here's why. And it's right back to what I said earlier. And that was this. we have a lot of strong call bias. I mean, look at this. All the calls are in positive territory. The sole put is RCL, and XLC got stopped out. And it got stopped out here as it broke into right above our point. Let's zoom in a little closer so we can see that. So XLC got stopped out right here. Now, what is the lesson? The lesson is, let me pause for a minute, please. Okay, apologize. All right, so the lesson here was the evaluators, the A up to the buy, an up direction, a buy, and a volatility of 1. And the indicator said this is going down because we got the indication right in here. And the result was we got stopped out. So the evaluators won again over the indicators. And we're doing that. We're tracking now our trades in not just here, but on the other accounts to see if the evaluators are stronger than the indicators. So if the indicators saying, hey, we're going in the down direction, and the evaluators say, well, we're still going up, whoever wins the tug of war is getting the point. And so far, the evaluators have won 3 exits. We had three exits, losers. But had we gone with the evaluators over the indicators, those 3 exits would have been positive. So we're going to be keeping an eye out. We are doing a penny stock trade here on as an experimentation. REI was selected from the scanner in the penny stock zone. The conditions were $1 to 5 and 2 million shares. And then the stochastics and RSI, as all the others, was met in their condition, MACD in the up direction. So we got into this trade here on REI. We are looking to get to that third ratio. We're looking to losing 1. Now, what happens if I was to lose this? Well, then it means that the REI could be traded again, or I'll just take the loss and transfer it over to the XLE ETF for energy and win back the loss. So one way or another, we're going to, if it happens, right now it's running 2.86%, $7.50 to its good. But that target's way up there. We'll see what happens. SNDL just got picked up today, and it got picked up also. And scanner picked it up right there. We got triggered here. It came back down a little bit. We're down 9%. And the same attitude is to get that 3-to-1 ratio. So it's a test of the penny stock experiment here is testing the stochastics strategy in the penny stock arena, then applying penny stock criteria of $1 to $5 with $2 million shares or more for that day. This was picked because it was the cheapest price of the time that the scanner was ran. And then this was picked because this had the highest volume when it was entered into. So that's how the 2 criteria for the 2 we're going to be running. And with that said, we are concluding today's report of Losers Become Winners, CPRI at 68%. And we'll catch you tomorrow. Thank you very much for stopping by.